Good morning, ladies and gentlemen. How do you do? I'm your host, Seth Julian, welcoming you to today's briefing. Today, of course, is the 16th of February at 7:05 GMT. We're looking at a 4-day chart of the S&P 500. Now, that unusual focal length, as we like to say about, and I remind you, it's one of the most important tool, in our opinion, with respect to chart analysis, is this button right here, the focal length. How you look at a daily chart, an hourly chart, a 15-minute chart, a monthly chart, etc. There's many different perspectives, focal lengths. And we use these photographic, ocular terms because it's expanding or contracting the size of the data set. So on a 4-day chart, which conveniently takes in approximately all of 2022, and the long rise before in the pandemic recovery. This is when inflation is clearly on the present and accounted for. Interest rates begin to rise, and the market starts to sell off in fear of slowdown in inflation takes hold. But what I want to point out here is the breakout. This trend is quite long. It extends from the beginning of January 22, and this breakout starts, I don't know, I can't see the date, but it goes, if this is a 4-day chart, it's a month. This is a monthly break. Here, it tells you right there, 22 days. So in 22 days, it's over 3% above this 2022 downtrend line. That's a significant breakout, in our opinion. This is just an alert. I'm not going long in this position yet. There's too much risk. But one of the things bolstering this is how resilient the U.S. economy is proving to be. Yesterday's statistics about consumer retail sales was stupendous, and it was led by big ticket items like cars, vehicles, furniture, stuff like that. The sales are growing. Sales and in the face of rising interest costs, and and inflation isn't slowing down the economy at all. So that indicates robustness. In fact, you'll notice that this breakout is part of a trend that starts sort of about here, not surprisingly, here, right at the bottom of that line. And so that's a continuous uptrend. Let's measure that. Here, that's like 11%. That's 10.97% in a quarter of a year, third of a year. So yeah, so we're on an uptrend with the S&P. And the observation we make, and we're not going long on this, but it's worth keeping our eye out, that the idea that the United States economy could weather a very steep rise in the cost of capital and still continue to grow seems to be gaining positive proof. And this is what we're trying to bring out. It's an alert. Keep your eye on it. When you're comfortable, and we'll tell you when we become comfortable, this could very well be a reversal point. And, we'll talk about it in the future. That's going to do it for now. I'm your host, Seth Julian, wishing you all, ladies and gentlemen, the ability to trade with confidence. Halas for now.